Testing, testing, testing. Welcome to Thursday Night Stock Charts Live. We haven't done one of these since, I believe, April, dare I say. So, I just saw a news flash up here. All eyes on oil prices ahead of Trump's Friday deadline for Russia-Ukraine deal. We have a news event tomorrow, a binary event. Expect some potential fireworks tomorrow. We'll be talking about the weekly charts this week. And always remember, as we're looking at the weekly charts, we're going to be saying one trading day left to go. So what we see at current on the weekly charts may not be how we close by the end of business tomorrow. We are in the bear camp on this market. I think that we are seeing some weakening here. And I think that there's a bit of shenanigans afoot with most recently the announcement by Apple, I guess, that they're going to be investing $100 billion, $150 billion worth of investments in the United States. And, really? Or was that just a great headline to gain favor with the administration? So we'll talk about what impact that had on the equity market. We'll take a look at how Apple was looking before that announcement, because it was not looking good. It has not been participating with the rest of the market. Why? Because they're struggling. Apple is struggling, and they have been for quite some time. They're no longer innovating. What was the last killer app or killer product that Apple came out with? It was the iPhone. That's it. And it's been years. Ever since Steve Jobs passed away. Tim Cook, he's done a really good job. I mean, he's done a great job with services, but where's the next product? Really think about it. So anyway, the reason why I wanted to do Thursday Night Stock Charts Live this week was because of last Friday's non-farm payrolls. And the markets rightly sold off on that report. As a reminder for those that are not familiar with that report, we had non-farm payrolls. The expectation was for 100,000 new jobs. Actual was 73,000 new jobs. Those jobs came from healthcare, government, and private sector education, which is expanding. Otherwise, if you X out those three areas, you would have had negative job growth. And don't forget, the prior 2 months were revised down as well. So job growth is really, for the manufacturing sector, is going like this. It's a nosedive. So job growth is not what it's been chalked up to be. And we've seen this for literally 5 years now, where the Bureau of Labor and Statistics has come out and said, okay, here's the jobs numbers. They beat by a mile, and then they revised down the prior 2 months, and nobody cares. This time, they cared. So the reason why I wanted to do a Thursday Night Stock Charts Live was I wanted to talk about, I had this smoothed out. This is off of ChatGPT. Non-farm payrolls, also known as the establishment survey, versus the household survey. Household survey in purple. The establishment survey, which is basically a guess of how many jobs are created. That's why they have so many revisions. Versus a household survey where they go knocking door to door and they say, hey, listen, you got people working in the house. It's a much smaller survey size, but it's more accurate in my book, because you don't have birth, death models. You don't have this nonsense that they put into the establishment survey. And the establishment survey is exactly what it sounds like. It serves the establishment. So you can see here in green, over here is the monthly job change. Almost always, the establishment survey not just slightly eclipses the household survey, but by and large, by a magnitude of 2 standard, 3 standard deviations. So when you take a look at the so-called job growth that we had most recently here, well, the household survey is all the way down here. Not wonderful. So a little bit of context to be put around the report that we're getting out of the Bureau of Labor and Statistics. Now, looking at the 3-month payroll, this is a rolling 3-month, I believe. Oh no, it's a rolling 3-month. The U.S. job market is flashing a warning signs. Non-farm payroll growth slowed to 0.97% year over year in July, the weakest pace since 2020. What happened that year? This marks the third consecutive month with growth near 1% year over year. Meanwhile, the 3-month average payroll change has fallen to 35,000 jobs, the lowest since 2020. Again, what condition was the economy in back then? We were well into COVID by then. Outside of 2020, this represents the weakest labor market in 15 years. In previous business cycles, such a slowdown in growth has preceded recessions. I don't make it up. Here is off of Bloomberg, U.S. continuing jobless claims keep creeping up higher. So we have multiple data points here. We have the establishment survey from last Friday. We have the BLS job growth slowing. It's still expanding, but slowing. And we have continuing jobless claims. Look at this hockey stick up. This is a big move up higher. This is a multi-year breakout with the most recent report. Today, this came out. Actually, scratch that. As of July the 25th. But they did report a new number today. Let's see what that number was. Yeah, the numbers moved up. They beat on initial jobless claims. So the numbers here, still no sign of rising layoffs. Granted, you're not seeing a spike up higher dramatically this week. U.S. has a low hire, low fire labor market. So it seems as if companies are content right now. So moving on to the valuations. Do we want to talk about valuations? Let's get this out of the way. Fed Watch tool. We have probability of a Fed cut in September of 93.2%. They're going to go. They're going to cut. The question is now, is it a quarter basis point? Is it a half basis point? If it's a quarter basis point, it's probably not going to be enough. The markets right now are believing the Federal Reserve is behind the curve. So I think they're going to need to go with a half basis point cut. Are they factoring that in at current? The answer is no. They're factoring in a 93.2% probability of a quarter basis point cut. Valuations. So I go over a mix of valuation metrics. Here we have the Shiller PE ratio. We're at 38.15. We've eclipsed the 2021 highs. We are now just shy of, we were above there last week. It pulled back. 38.15. It pulled back. All right, so we were above this. We pulled back by the end of the last Friday sell-off. We pulled back on the week. So last week we did eclipse this. We did close there on a daily time frame. We have since pulled back. If we close above that mark, that puts us at all-time highs not seen since November of 1999. And that, of course, was the top of the dot-com bubble. Now, when you take a look at valuations, this is a combined trailing PE, combined forward PE, the CAPE ratio, which is also this, the Schiller PE ratio, price to book, EBITDA, earnings before interest, taxes, amortization, Q ratio, I'm not familiar with that one, and market cap to GDP, that's the Buffett indicator. All of those combined, we are at highs not seen since 1929. Congratulations. Congratulations. Buy stocks. Buy stocks. So the market is priced for perfection. Now, to be fair, not all doom and gloom this year. This has been one of the best earnings season in years. True. It's been a pretty good earnings season. 63% of S&P 500 companies have beat earnings expectations by at least one standard deviation, the highest in 4 years. Wow, 4 years. Excluding the post-pandemic recovery, this marks the best quarter in at least 25 years. That's huge. By comparison, the long-term average has been 48%. At the same time, just 10% of firms have missed estimates by at least one standard deviation, the lowest share in a year, and below the long-term average. What's missing here for me is the forward-looking guidance of these companies. I asked that question because many companies, they pulled growth forward. What does that mean? Well, you had the threat of tariffs. So what did companies do? Before the tariffs got implemented, they went out and they bought a lot of goods, supplies, etc., overseas quickly, and then they pulled that growth forward from a lot of these companies. So is this reflective of that behavior? Maybe, maybe not. It should certainly be reflective of it reflected in GDP, gross domestic product. I'm not seeing any comments. Highly unusual. That means that my live stream software is not working. I need to go over to YouTube because you guys are never this quiet. Strange. I think I hurt somebody's feelings. Nobody's leaving comments. Where are my comments? Here it is. Nothing there. Very strange. Okay, so moving on. The Kobayashi letter, corporate insiders are dumping stocks into July's rally. Only 151 S&P 500 companies saw insider purchases last month, the lowest since 2018. While insiders selling slowed compared to June, purchases dropped even more. You know, I always value buys over. Oh, here we go. Here's the comments down here. Why are they down here? TF had or high? There we go. Okay, a little bit better. So I always value buys over sells because you could have, you could show me a sell by any CEO, but he may have been selling for the past 5 years because they're automated, right? It's automatic sales. They have to pay their taxes, they have to pay their country club dues, etc. So you need to take that insider selling with a grain of salt. If there's mass insider selling by both the CEO and the CFO, well, take that seriously. Because if it's out of the norm, then you have a problem. Buying is a different story, right? If you're going to have, let's bring up UNH, case in point. If you're going to have insiders buying the stock, here's the weekly chart of UNH. We've talked about, in fact, let's go to a monthly chart. There's so much damage that's been done here. When you go take a look at insider buying here, right back here in May, granted they were too early and that's equal to being wrong, but they're buying stock in a big, big downtrend. That to me, they didn't have to do that. They didn't have to do that. So I think it's good that you have insider buying. You can have automated insider selling all the time. You can't read all that much into it. Case in point, you have Meta. I mean, you can run down these looks. Zuckerberg has been selling month after month for the longest amount of time. If you looked at a 1 month or 2 month view of his selling, you probably get freaked out if you didn't understand the overall trend, what his plan is. This is all advertised to the market. So he's not even a 10% holder. So consistent selling here. Oh, by the way, we're on TrendSpider. They have a new piece of functionality here. Click of a button, AI. Check this out. I guess they're using Claude, Gemini, OpenAI, assistant personality. You could choose the personality that you want to guide you through. I'll stay neutral for right now. I'm still just playing with this, but what I've done so far is pretty cool. Let's see. What kind of data can you use? What can you do for me? Good question. So again, they keep adding to their functionality here. And there you go. I can help you navigate the markets using a variety of data sets, blah, 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 blah. And good stuff. So I encourage you to head on over and take advantage. Use my discount code CON35, link below on YouTube, link above on Twitter and Facebook. Get 35% off and play around with it. Have fun because it's pretty cool. Palantir, you Palantir folks out there, one-stop shop. A little slow. Well, based on the data, comprehensive appeal experiencing market momentum. So you get some stats here. Good stuff. One-stop shop. Good stuff. Take advantage of that 35% discount code. We'll be demonstrating this a little bit more later on. Let's get to what else we want to talk about. All right, so insider selling. Here's the chart drying up. And we have some bulk selling or buying of large blocks of out-of-the-money put options. You have at the 6,000 strike expiring in December, not too far from now, $1.82 billion worth of puts. September, $1.67 billion of same strike puts. And another tranche going out to same strike, 1219, 5,000 strike, nearly $1 billion worth of puts bought this week. So, you take a look at the insider buying drying up. You're seeing speculative bets to the short side. You have valuations at all-time highs. They're used today or yesterday, I should say, Apple, as a weapon. Because you take a look at Apple, it has been dramatically underperforming the overall market in 2025. So to me, I think that they were putting a lot of pressure on Tim Cook to make a deal, and they made a deal. We'll get off your back, make a commitment over 10 years, 15 years, whatever, make it a big number, and we'll get off your back. And they did that. What did they? Because they knew it was going to come on Monday morning. They saw what happened on Thursday. They saw what happened on Friday on the non-farm payrolls, and they knew what was coming on Monday morning. Sure enough, what happened? You had this announcement made, and to me, this looks like a bear flag setup. We could break out to all-time highs here, but improbable with these current valuations. Let's see what the insiders are doing here. They're not buying. We haven't had an insider buy in quite some time. Let's check out seasonality. So they're spiking up Apple, which is an okay month, the month of August, but September is by far the worst month out of the year. Am I buying Apple stock here up and into resistance and ahead of the worst month out of the year? No. Weekly chart. To be fair, next week is tied for the best week out of the year. So perhaps they have a little bit more juice left to go here on Apple. Let's say hello to folks. That was so weird. TF Hatter said hello to Denny. Welcome. Thank you. Appreciate that. Folks, if you can hit the like button, I'd really appreciate that. Helps me out with the YouTube algorithm. Lester Charles. Hey, Bob. Welcome to you, Lester. Polish Taco. We're going to go over the semi-group in a couple of minutes when we go over the weekly chart. Let me refrain from answering that. Let's take a look at the chart first. My gut says yes. We were up big yesterday. Semis were down on the day. I don't know how they closed today. So the look at the weekly charts right now will be the first look I have along with you folks. So let's take a look at the weekly charts. Let's go to it. We did this. We did this. All right. Bullish percent index. A lot of bullishness coming out of the market. We were a bit frothy in terms of sentiment, and that has changed over the past couple of weeks. We have put in a new weekly lower low. Not a huge move down on the week. What are we down? Quarter percentage point. Not a big move relative to last week and relative to prior moves, but one trading day left to go. We'll see what that brings. Bullish percent index on the S&P 500. The other was the NASDAQ, down 3.19%. So far more weakness on the S&P 500 sentiment indicator than on the NASDAQ. The CRB commodity index, a couple of weeks ago, we were looking at this chart and I'm saying, you know what, we could be getting ready for a continuation breakout. We had broken out back here. And after we had pulled back, I said, you know what, if we take out this 314.40 mark, the Federal Reserve is going to have to start thinking about raising rates, not cutting rates, because this is the textbook picture of inflation. But what have we done here? We're going the other way now. Demand for goods, in particular copper, is getting annihilated. The funny part, I went to the store the other day, really early in the morning. I got out of the gym and I said, let me go. I got to get coffee. I need coffee when I get home from the gym. So I headed over to Stop and Shop, my local supermarket. I got to tell you, I took a look at the prices and my jaw dropped. They went up like 30%. And I came home and I said, I don't recall coffee being in the bull run any longer. And it's not. We peaked out back here in February of this year, and we've been in the bear market ever since. Tariffs hit. They jacked up my coffee prices by 30%. So I don't share in the comments if you've seen anything like this with any other products, or if you're seeing it in your area with tariffs as well on coffee. Coffee, the way that we're saying in New York. Yes, thank you. Do me a favor. Just head over here. I'm going to put this in the, I'll forget. I'm telling you right now, I'll forget to go back and take a look. Head on over. There's no credit card required. Just put it here. And I will be more than happy to go over for you. Just put it right in there and you're good to go. Okay. So let's go back to the weekly chart. Nobody's used to me doing Thursday night stock charts live. Again, we haven't done this since April. Okay, yield curve. Flat on the week. Not much happening here. Let's go to the monthly chart on the yield curve. We're very close to a major breakout here on the yield curve. And that will not be bullish. Looked as though back here when the yield curve was beginning to steepen up quite a bit, the S&P 500 paused. Then the yield curve pulled back for several months, and that allowed the S&P 500 to move up higher. Bonds are firming up. Staples, very, very strong. They're overlaid here. Natural gas, weak, but that tends to do well when you get a steepening yield curve. So keep an eye on natural gas. TLT, 20-year bond ETF. I don't think Talon's on. He was asking about this earlier. And did I like it? And I like it, but I'm not ready to buy it yet. And the reason is that we have overhead supply immediately above. So if you take a crayon out, actually, let me do it this way. They changed stockcharts.com. Let me do this. This, annotate. Okay, so here we have it. This is your primary upper band of resistance. Here's your primary lower band of support. Here's your secondary downtrend line, which we broke out of. Now, me, on a secondary downtrend line, I don't want to get aggressive. I would like to see a retest of this breakout point at around $86 per share. If it got back down there, I would nibble a little bit. Minimal risk, lots of reward. That's good stuff. Nobody can get angry with that. But if we don't get that pullback, I want to see a close on the TLT above 88.49. That marks significant resistance. Then add more aggressively on a breakout above this primary downtrend line. I think it's got a great long-term consolidation, multi-year now consolidation. So the longer the consolidation, the greater the validation of any breakout. This is not going to save. Not a big deal. No. Now, moving on to yields. Yields are up on the week by over a half percentage point. This is the TNX, the 10-year yield. But Stokes, momentum is weakening. So beware of a fade. I always teach members that when you get your momentum indicators, in particular the stochastics, both lines trading below the 50 level, that means a loss of momentum, right? You're all those buyers that were stepping in to buy the dip, they're not there anymore. And when they are there, they buy early and they get faded into by sellers. And I worry that could happen tomorrow. So would I be a buyer or would I be a buyer of TLT, which would go up if yields fade here? Only on a breakout. I would rather see the retest of that 86 mark first, nibble, than buy more on the breakouts. But beware of the 10-year. This could easily fade by tomorrow. But remember what that is implying. It's implying that there's weakness in the economy, not necessarily strength. If there was huge growth in the economy, well, you'd have velocity of money, people spending money, which they're not because everybody's in debt. Student loan debt is through the roof. The delinquencies through the moon now, and that's not good for the overall economy. So we're not seeing that. If we had a vibrant economy, yields would be going up, and they would be screaming at the Federal Reserve, "You need to raise rates." That's not happening. But all the while, and this is what I love about technical analysis, and that's that the markets send you signals. We could ignore them to our own detriment, or we could use them as leverage. Now, what do I mean by that? Well, you have bond yields which are weak. They've broken support. Momentum is waning. Yet, TIPS, Treasury inflation protected securities, they broke out last week. They did a retest this week, and we're at multi-year highs. You only buy TIPS when you're worried about inflation. So if you have growth going this way and inflation going this way, and growth probably being impacted by unemployment or stagnant jobs, then that's stagflation. And that's why you're seeing gold, silver, precious metal names rally. The dollar, very bearish price action here. We had a few weeks of a rally here. I won't say it's done because you don't know until we break down to new lower lows. But let's just say that warning flag on the track. Beware. And if we do break support here, this in and of itself, because we import so much, is in fact inflationary. Coffee prices, which I just talked about, even though the price of coffee is not necessarily going up, it's going up in dollar terms. So beware, prices, if the dollar drops, can still go up, even though the commodity price globally is stagnant, maybe even going down. Prices in dollar terms, it takes more dollars to buy that can of coffee. So beware of this breakdown. And if the Federal Reserve cuts rates, forget about it. I mean, the dollar is going to weaken like you can't believe. And God forbid, I forgot to go over this because it is Thursday, and every Thursday release their balance sheet at the Federal Reserve. They dropped it dramatically last week. Let's see what they did this past week. Not much activity here. It did see a decline. So the Federal Reserve continues to roll off debt. This is Jay Powell giving his middle finger to President Trump. So the dollar, very weak. Yen, very strong. We saw a pullback after a big rally, pullback, bullish reversal bar last week, follow through this week. Folks, this is one of the bearish things that could happen for the equity markets because rising Japanese yields and rising Japanese yen means that the yen carry trade impacts global liquidity. You don't have people borrowing in yen cheap and arbitraging that money in other global markets because the spreads are not there anymore. It's still profitable, but it's not as risk-free a trade as it used to be. So the yen carry trade, as we begin to break out here, Japan has inflationary problems. This must go up because they need to raise rates over in Japan. Euro, bearish week last week, bullish week this week, bearish for the US dollar, that you have both yen and euro moving up. That's why you're seeing TIPS move up. Bitcoin. So we own Bitcoin, not a huge amount, and we began buying XRP. We'll be going over that chart in a moment as well, just this past week. To me, this is a bull flag setup. Strong week, up 2.61% on the week. Good stuff. Let's check in with XRP. For those folks, we had a good day here today. Wow. 9.25% move. So the reason why I may do a video on this because it's so important. A few weeks ago, the BRIC countries, led by China, they came out with their own payment system. Ours is called the SWIFT system. And the SWIFT system has been around for 60 years, more than that maybe. And it's old. It's old. It takes several days for a bank to transfer money to another bank over in Europe or across the street for that matter. It doesn't matter. It's very, very slow. You have too many people touching it. It's expensive. It's done. It's over. It's got to go away. And it's going to be replaced with XRP. Bank of America has already adopted. You have several European banks have already adopted it. Settlement like that and cheap as dirt, all in the blockchain. So I decided let's diversify our crypto portfolio, not away from Bitcoin, but to include now XRP. Because if you take a look at the monthly chart of XRP, look at this chart. Look at this consolidation. It's been consolidating all year long. We had a huge breakout last month. Now we're at the highs of this month. Good stuff. I think this is going a lot higher. So bullish on XRP and Bitcoin. Any other crypto, I can't even tell you what they do. I have no idea. I only buy what I know. Jody, everybody's been asking about you. We've been worried sick. Welcome. Glad you're here. Volatility. Wow, interesting. Let's do this. I need to edit this list. I want to show you something. Pop. I had so much stuff here. I hate to delete it. Bob, get rid of this. All right. I can't believe they limit me on how many charts I can save. Okay. So update that. All right. So let's now take a look at volatility. Now, this is a daily chart, not a weekly chart. But we're down on the week. We know that. So it appears as though that we are in a descending wedge, a descending wedge formation. This is going to need to get resolved. And my guess is, because we've added the shorts this week, I think it gets resolved to the upside, but you never know. Momentum. Still okay. It's not above 50, but it's okay. So volatility posing a bit of a threat here to the bulls. Last week was such a strong week. I'll tell you, man, if they close this week up positive, that will not bode well for next week. But that's a lot to ask for. I mean, we're down over 18.5% on the week. It's volatility, and it can do whatever it wants, frankly. But that is a lot to ask for it to close positive on the week. So, again, we have a binary event coming out tomorrow. The deadline is on Russia, Ukraine. We'll see what happens with oil prices. Dow transports up on the week. But when you take a look at the daily chart of the Dow transports, wrong chart. Today we saw a bearish engulfing bar. Not good. No bueno. So we managed to hold support, but this is pretty bearish stuff. So for those folks out there that use the momentum stochastics, we identified this weakness back here with this lower high, and we got the sell-off on the transports. My guess is that we could quite very well be putting in another lower high on the Dow transports. And when you take a look at the weekly chart of the Dow Jones Packaging and Containers and Packaging Index, not a bad week here. Horrible week last week, but we have a reversal bar. Let's see how we close out the week. I'm surprised that this looks so bullish with the transport so weak today. I mean, talk about a rejection of the transports breakdown today. We'll see if this holds up. Dow Jones Industrial Average weekly chart, we have a topping tail. But to be fair to the Dow Jones, we have broken out of a bull flag setup this week. We did the same back here. I don't like the fact that we had this bearish engulfing bar, and we have now retested the breakout point yet again. I mean, you see a breakdown in the close below this line in blue back into this trading range. I think that we're going to take out the lows of August. What was it, July? I think it was July. No, it was August 1st. Mr. Sean, welcome. Jody. How? Often always late, but always okay. That was good. Awesome. TF hat or BMNR is worth a look. ETH play like MSTR is with Bitcoin. Kathy Woods, Tom Lee is all one ticker. Okay. I don't know much about. I know MSTR very well. ETH, I know the name. I don't know what it does. I have no clue. I'm not going to pretend that I do. S&P 500 inside bar on the week. No new weekly higher high. No new weekly lower low. Okay, what did we do today? Down day. We held support. Are we putting in a double top? This is what we're looking for. Before we go all in to the short side, we want to know do we fail to break out above 639.85? And if we do, and we press lower, do we break below 619.29 and close there? If we do, that's a continuation breakdown on the SPY. And take note of momentum. Looking like it wants to roll over here. How is volume on the day? Rolled in above average, where up volume has been a little bit sketchy. Let's go to the 30-minute chart. Let's see how they close this out on the day. You always want to take a look at the 30-minute chart, 15-minute chart to get a vibe for whether buyers into the close, because that's when institutions put their money to work. Not in the first hour of trade, in the last hour of trade. And good close. They took it off of its lows. If they didn't, it would have been an ugly close. Good volume into the close. I'm not going to do the equal weight. Well, you know what? Let's do the equal weighted. Equal weighted is underperforming the S&P 500. So the market cap stocks, Amazon, Google, NVIDIA, Microsoft, those big names, they're dragging the SPY up higher. When you take a look at the equal weighted, everything's equal. Amazon's equal to SMCI. We're only up 0.66% on the week. So this is why we look at both charts to get a vibe for, do we have broad-based participation, or do we have too few stocks leading the market up higher? And that's like a house of cards. Trip Qs. Here's the weekly view. No new weekly higher high. Maybe we get it tomorrow for all I know. But man, last week was one bearish candlestick. Volume on the week thus far, trending on average. Nothing out of the ordinary. Daily chart. Earlier today, we went negative, but we are holding in a triangle formation. Up volume today was just shy of average, so not horrific. Let's check out that 30-minute view. Good close. Good close. Good volume. Not great, but good. Let's see what else we have here. The banks on the week, not a good week. The banks are down yet again. Technology, no new weekly higher high. No new weekly lower low. Semis. So I was asked earlier, is it time to short the semis? You looking at a weekly chart, I have to say no. And the reason is that they could still take this up higher. And you may be saying out there, listen, don't you see your own chart? Don't you see that it broke down below the lower band of support? Yes, I do. And we have retested and gotten rejected last week. The problem is this week we don't have a new weekly lower low. So that tells me that it's still got enough rocket fuel to make another effort to try to recapture support. Now, if we fail to hold last week's lows, then my tune changes. At this point, given the size of our short, I would rather short on weakness and add on a break to new lower lows rather than speculating, as we've done, that we're near a top. Daily chart, SMH. Take note of the lower highs here on momentum, on RSI. Filled candlestick on the day. We did not close at the highs of the day. Yes, we closed up, but all up days are not made equal. Do I short this? No. You close me down below 279.19, game on to the short side. Software. Inside week. Very lackluster week, despite all that hype with Apple. Biotechs. Consolidating, not much going on there. Staples. Folks, Staples are getting ready for a rip-your-face-off rally. You remember earlier in the year when the S&P 500 went this way, bonds, which would normally go up when the S&P 500 went down, that didn't happen earlier this year. What happened was S&P 500 went down, bonds went down, and Staples went up. And it looks like history's about to repeat itself yet again. This is a very bullish setup on Staples. We had broken out back here the week of April the 14th. We've been consolidating for several months now, and now we're beginning to break out. Money flow is going into the Staples. We have one trading day left to go. We're already at the moving average on Staples, so above average volume is expected for the week. Emerging markets, I was not loving this sector last week because the dollar was strong. Now the dollar is weak, and they trade inversely of one another. So emerging markets looking good here. They're not as cheap as they once were, but looking good. And this is ex-China. Let's check out with China. Then we'll go to gold. Even with China, EEM, 30% China, looking good. Oh. Energy, very weak. Oil, goddamn, down nearly 5.25%. So think about this. You have OPEC, which is, I believe, cutting production in August. Yet, oil is breaking down. Why? I thought we were supposed to have so much growth. Why is there no demand for oil? Oil's down over 5% in one single week. Now, looking at gold, remember earlier we were talking about market signals, right? You have declining bond yields. That's indicative of an economy that is slowing. It's weak. It's not growing. If it was growing, yields would be going like this. Okay. So we have jobless data, which is poor at best. We have yields declining. We have the dollar declining, which is inflationary. We have tips broke out last week, retested the breakout point this week, reversed to close higher on the week. We're just off the highs of the week. We also now have gold getting ready for a massive breakout. If there was disinflation or deflation, whatever word you want to make up tomorrow to account for the fact that there's no inflation, gold is not telling you that. Gold is saying there's inflation. If there was deflation or disinflation, we would be breaking down right now because I've traded gold in a deflationary market, and you do not want to be long of gold in a deflationary market. Nobody wants it. Let's go to the daily view. Look at this. Beautiful. And if you think this looks pretty, I just saw a Franklin pop on. Hey, Franklin, keeps going up. What's your, I think we're going to par. I think we're going 100 on Nugget. Let's get to it. I just talked to, wow, my God. I haven't even looked at this since the close. Wow. 21% on the week. Holy cow. Holy cow. Volume is not good. Volume is very weak. Be careful here. Be careful. Potential shooting star formation. Doesn't mean they can't bring it to 100. But I would be careful here. This is a leveraged product, not for the faint of heart. But I do think that in the next couple of weeks, we'll be at 100 on Nugget. As for the GDXJ, these are the junior miners, up over 11.25% on the week. We own these. We enjoy them. Looking good. We own gold, mining stock. We've owned them for years. Silver, good week on the week. This is a leveraged product, folks. So take that with a grain of salt. Up 7.77%. We own this as well. Good volume is not good. Good price action, though. Silver mining stocks. Beautiful. Oh, wow. New multi-year highs on the silver miners. And the reason why these are rallying the way they are is not just inflationary concerns, not just silver and gold moving up higher, but oil is moving lower. Why does that matter? The largest input cost for the gold mining stocks, oil. Perfect storm here. Rising gold, rising silver, declining costs, rising prices of the underlying what's in the ground. Beautiful. Look at the volume here. Insane. Palladium. We'll look to buy more of this soon. FLNG. We're having a really good time with FLNG. We're getting paid around 13%. It's only yielding now 11.82, but still a great opportunity to get into the LNG market. I've owned this for, I don't know, guys, how long have we owned FLNG for? At least a year and a half now. I bought it because I identified this consolidation, and take note of prior consolidations like back here, and you had an 800% move. Back here, consolidated, you went from $1.86 to $28.90. You do the math on that one. And now we're breaking out of a multi-year consolidation. So I think we're going a lot higher on FLNG. Very bullish stuff here. What did we do today? I know we were down yesterday. Eked out a gain on the day. So good stuff. Let's go to the closing price action. Excuse me, let's go to not closing price action. Starting to lose it, getting loopy. Let's go to stock chart request, and we will call it a night. I don't think we have many to go over tonight. ES, MSOS. Folks, again, we're going to be using TrendSpider. Use the link below. Get 35% off on YouTube using discount code CON35, CON35. Link above on Twitter and StockTwits. I showed this earlier. I'm going to re-show it again. AI now integrated with TrendSpider. Meet Sidekick, your new AI-powered assistant to analyze data, compare stocks, dig into financials and anything else. This is going to be cool. More examples. What's my current chart telling you? This is Apple stock. See what happens. I don't know what the M is for. Apple, comma, M. I got to ask about that. Okay. Apple is showing strong long-term momentum. Yeah, long-term. Okay, fine. It's giving you resistance levels, support levels, going into the technicals, fundamentals. Good stuff. I can't read all this stuff to you right now, but this is really cool stuff. Take advantage of it, folks. I guarantee they're going to be raising prices in a couple of months this is in beta mode right now. So once they get it perfect, they're going to raise prices, guaranteed. Members to the Contrarian Trader, you're not getting a price increase. All right, let's go to MSOS. So this is a trust. A trust of what, though? Pure US. I don't know what this trust is. So we'll just do the technicals. As a matter of fact, let's check out Sidekick. Let's put this over here. Let that load up. So there's your long-term downtrend channel, which we broke out of. So now let's overlay some trend lines here. Okay, based on the screenshot of time, here's my analysis. They're not telling me what. Oh, this is a cannabis sector. Okay. All right. The cannabis sector. Okay. Okay. Now, wow, this is pretty cool. Selling you have a resistance up at around $10 or $11. It's way up there. Then $6 or $7. Support at $2 to $2.50 per share. Let's see. Let's validate that. These are the automated trend lines. Yep. There's support. There's your resistance. It's looking okay. I mean, this is a monthly chart, so it's not a short-term chart. It's been consolidating for most of the year. It's broken out of the downtrend. I think you can nibble on this speculatively. And if you begin to break out above $7 and let's call it $7.80, you add more aggressively. Especially if you close above $11.90, because that's a new bull market. So very bullish here. Not very bullish. Speculatively bullish on MSOS. You start closing above resistance levels, then I become all the more bullish. I like it. Let's go to a weekly chart. Last week, the week before was good. We're going up. Bullish. Volume is good. What else do we have? UNH. Okay, so UNH, we are at a ton of support on UNH. We hit our support level, our price target last week. This week, I went over this over the weekend. I did analysis on it. It's on YouTube. If you want to see it, I said you're going to get one of two things this coming week, meaning this week. One, we get a washout, which is still possible. We get a washout down to 227. At worst, we go down to 216 in that range. Or you're going to get a gap up, and you're going to get an inside week. And that appears to be what we have this week. No new high, no new low. So I'm already long. I already have a long position here. I'm not ready to go adding more yet because I worry that this could quite very well be a bear flag setup, meaning we go up for a couple of weeks, we tag resistance, and then we drop. I don't want that. I would rather have had going into the new week a washout, an unsustainable washout. Then I would have bought at support levels and then hung in there for the long term. Now, you do have insider buying here going back to May. Let's go to a daily chart. What did it do today? Still relatively weak. We're not breaking out because everybody loves Microsoft. Let's take a look at Microsoft. Well, actually, Microsoft's been down for 3 days in a row now. That's not a good example. NVIDIA did a reversal on the day yesterday. It was down. Closed up. It was up today. So UNH right now, I think that when the staples get going, then you will have the stocks that nobody wants. HLV, which is the healthcare sector, does not include UNH. It's just biotechs. Those names are in a 25-year, at a 25-year low. So you look at that and you got to say, okay, are we basing? Is it time not to just take a look at the headline and say, God, I got to avoid these stocks. There's no opportunity here. Well, when stocks are at an 25-year low, you want to check in on them from time to time because maybe you have opportunity. That's not HLV. This mosquito's driving me nuts. God, what's going on here? V. What's the healthcare ETF? It's been 25 years since I looked at it, it feels like. Healthcare. XLV. I'm supposed to be a professional. XLV. Look at this. Let's go to a monthly view. This is not a 25-year lows. Stupid Twitter. Who did this? I think I even retweeted it too. XLV. Oh, that doesn't look right. I'm not sure why they're saying it's a 25-year. Oh, this is a ratio chart. It's a ratio chart. XLV relative to SPY. Gotcha. Now I understand. Okay. It's a ratio chart. So is there opportunity here on healthcare? I know this is very noisy. Let's clean this up a little bit. We don't need quarterly. I mean, I think there's opportunity here. I think we're going to consolidate for a while, but we're now retesting support levels last seen back here in May. Am I a buyer? No, I'm not a buyer. But you show me a reversal bar and a close back above 131.06. Guess what? I'm Johnny on the spot. I'll be buying some HLV. Right now, it's fighting for its life, but it's at critical support. All right, let's we went over the dollar earlier. The dollar's very weak and threatening to break down to new lower lows, especially when they cut interest rates, which appears to be a foregone conclusion in September. And I think that is it. That's it, folks. Folks, thanks for being here. Like, subscribe, you know the deal. And don't forget about Sidekick on TrendSpider. They just went next level. Give me a break here. Integrated AI, click of a button, ask it whatever you want. It's awesome. So take advantage of my 35% discount code. Link below on YouTube, link above on Twitter and Facebook. Members, get it free. Head on over. 14-day free trial to the Contrarian Trader. Link below. Take advantage of it. Everybody have an awesome night. I'll talk to you tomorrow. Be well.